Gentlemen, hi. Great to have you both on the show, Shankar as well as Nilesh. Shankar, let me start off with you. Like we were discussing just before the show, the ticker tells the story. What can the budget possibly do? We are at a time just aligning ourselves with the rest of the globe, and that clearly seems to be in a massive risk-off mode.
Right. Yeah. So, as you correctly pointed out, Aisha, in your lead up to this, that over time the impact of the budget has become less on markets on let's say on a long-term basis. It does have effect, obviously, on the day of the budget and a day or two after the budget, but the impact has lessened, and that's to be expected because a lot of the policy announcements by governments don't necessarily just happen on budget day, and they happen through the year. That said, last year's budget was really something the markets cheered because it lifted the whole gloom from over the heads of the masses, over the heads of people like ourselves, by telling us that the government would really not bother about the fiscal deficit, but really would go for growth and go for spending. And I had written an article for your newspaper side, and I had said that this is like the equivalent of Kapil Dev when India we needed a few runs to avoid the follow-on against England, and he did it in style by hitting 4 sixes in a row to take us beyond the follow-on stage. It was exactly like that India was facing a follow-on situation because of COVID. Growth had really crashed. So the finance minister came out and she hit 4 sixes straight in a row in the last budget. Now, this year, things are a lot better. It's a very, very different macro picture for India. The collections have been fantastic. Economy has been doing, very, very well. I mean, frankly, beyond expectations. I'd really like the whole pent-up demand of 2021 is catching up and going a lot beyond that. So things, in fact, in general, I would think this is one of the best macro situations India has been in many years. Despite whatever the global gloom of markets or Indian gloom of markets might say, the underlying economic picture is extremely robust, which fortunately will give the finance minister a lot of leeway to give us what really we want, which is that India should still push for growth, even at the risk of a bit of inflation, because it's my belief that people are better off with growth rather than low growth and high inflation. So if you try to tinker too much with inflation, you kill growth. But that in the long run is far more hurtful than a bit more inflation in order to generate more growth. So in my view, the finance minister, the RBI are fairly aligned in that perspective. I think the budget will only take that thinking forward. I don't think they will be extra cautious on the inflation front. So that's my read on the budget, without knowing too much about what policies and what else they might come up with. But I think broadly, the government will still push for growth.
Nilesh, like Shankar is saying, you've been tracking the budget for a while now, for many years. Back in the day, what used to happen was it was Amdani, Athanni, Kharcha, Rupaya kind of a story with the government. But that's not clearly quite the case. Your GST collections have been fabulous. The government has enough of a pool to actually work and spend wisely. But given that it's also election year in some of the key states, what is that spending math that's going to keep the markets happy?
Well, Aisha, if we really look at this government's track record, especially on the budget, and it's it's going to be the 7th or the 8th budget which is going to get presented. And the reality is that that the announcements on the day of the budget are purely more to do with economics rather than politics. I can't remember of a single budget where there was something done to basically just keep the elections in mind. So clearly keeping that perspective, still expect the government to continue to push forward on growth. And given the kind of buoyancy which is there in GST collections and other tax collections, including the STT and things of that kind, it looks like that it's quite possible that the government will just accelerate on the spending front. And it's hard to really pinpoint which areas of spending will be targeted, but it obviously is the case that spending on infrastructure, spending on social sectors like education and health, spending on further expanding the internet infrastructure are some of the things which ought to be done, not just in the name of development, but also in the name of having a more sustained growth over a longer period of time. And the budget is just one of the steps towards that. And I think it'd be great if the government just keeps up the momentum that they had started off in the last budget and continues to sustain that, especially on the back of a very benign economic backdrop. So I clearly believe that the government should go ahead and spend. I think tax collections will remain buoyant. And so to that extent, one of the ways to boost growth would be to basically spend the way through. Obviously, if it's better if it's focused a lot more on asset creation rather than just basically putting money in the hands of the consumers. Maybe, of course, probably a good mix of the two also is pretty fine. But it should clearly have a nice balance between spending on asset creation as well as spending on boosting the purchasing power of the consumer. So I think on the whole, this should essentially be a budget which is focused on growth. And I just kind of make one point here that 2 days back the IMF came up with a forecast on GDP growth, and India's growth was projected at 9%. China's growth was projected at 4.8%. That's a good 4% differential between the growth rates of India and China. Now, we can probably just argue that China is probably deliberately trying to slow down so as to manage growth, but nevertheless, numbers are numbers. I have over the last several years, or maybe never in the last 20 years, seen this kind of a growth differential. So this is the kind of expectations that everybody has in terms of sustained growth. And I think it's important that the budget tries and endeavors to do whatever it takes to sustain India's growth premium, not just for the next year, but for the foreseeable future.
Nilesh, you too have been very vocal that the government needs to encourage private investment in order to make India a preferred investment destination. 3 things that you think that the budget can spell out to try and instill this or boost this?
Well, clearly, I think wherever possible, if you need to relax FDI in some of the sectors still, I think that should essentially be a good thing. Number one. Number two is keep in mind that when there is basically the privatization, disinvestment, or even the national monetization program, obviously, of course, international investors essentially are going to kind of come in and bid for some of those assets as well, and ensure that essentially we create a congenial environment for them to come and participate and bid and maybe end up owning and operating some of those assets, including whether they're direct private operators or they're basically sovereign wealth funds or any other form of investment. The third is that I think, the concept of special economic zones or the special export zones, if required, then whatever needs to be done to ensure that we have a relatively smoother implementation of that concept and that concept spreads, I think it would be great. The fourth is the concept of international financial center. Clearly, all major economies have encouraged the concept of an international financial center, and whatever it needs to basically streamline and remove any bottlenecks which are there so that everybody can come in and really participate in a much more stronger and a vibrant manner. I think these are some of the steps which ought to be taken. So be it financial investment, direct investment, portfolio investment, I think whatever it needs to be done ought to be done so that we attract even more and more capital, which is directed towards even further boosting economic activity. I think economic growth and financial buoyancy should not be seen in isolation. I clearly believe that for a fast-growing large economy like India, both have to move hand in hand. And budget is one of the great platforms to ensure that the policy moves forward to further encourage and boost private investment in the economy and in our markets.
Right. Shankar, the other thing is also bond market inflows, or for that matter, inflows at large into India. Now, we all know that there is a lot of, or rather dollops of long-term, long India money which is waiting to be parked into all these new IPOs. But recently, the other debate which is also picked up is that whether these startups need to list outside of the country, perhaps on some of the global exchanges. What can the government really try and do to keep the startups within the homeland boundary and have all that long-term money which is waiting to park itself into these, new age startups, find its way into the country or back into the market?
You want the startups to not list abroad. You want them to list in India, right? So I'm saying, given the state of the startup, when they have listed in India, I think they're better off getting listed abroad. Why would you want these guys to be listed here? Because our markets were perfectly fine till these guys came with overhyped, overpriced offerings, in which it was largely offers to for sale by the venture capitalists and in some part the promoters also. And stupidly, retail investors have gone and bought a whole lot of rubbish companies at even more rubbish valuations. And I would, while I like the fact that Indian markets have matured enough to give them so much capital, I think the quality of company that has hit the market with no real fundamentals in large part, really poor business models, nothing innovative about them. It's just another old economy business with an app. That's pretty much what it is, whether you're selling lipstick or you're selling food delivery or whatever it is selling. I think they're just really crap businesses at the heart of them. They're just been dolled up to appear very new age, but there's nothing new age about selling, stuff on the net, right? That's been done for the last 25 years. I just think that whole space needs to mature and mature really fast, because investor sentiment has been really crushed by these so-called new age IPOs. And I think we are better off making them list elsewhere than get listed in India.
Nilesh, so to summarize our interaction today, 5 things that the markets want from the budget.
First, of course, is essentially a huge focus on growth. Ensure that India sustains the premium growth, number one. Number two is essentially do whatever it takes to boost India's competitive in exports, particularly of manufactured goods. 2021 has been a brilliant year on that front, and whatever it takes to sustain that momentum. Third is to ensure that we continue to attract investments, both in the real economy as well as in the financial marketplace. So that's the third thing. Fourth is to unveil plans to expand our internet infrastructure. I think without digitization, India will not be able to sustain high growth rates. So I think that's very, very important. And fifth is to ensure that some of our social sectors like education and health receive a lot of importance and receive the kind of steps to ensure that these social sectors become truly universal for the 1.4 billion people of India. So I think these are the 5 steps that I would look forward to.
Shankar, 5 things that the markets want from Budget 2022?
That I don't think the government should be overtly concerned, about really inflation. I do understand it affects the common person and all that. All that is well and fine, but ultimately, the solution to inflation is not slower growth. The solution is actually faster growth, because faster growth leads to, more purchasing power being put in the hands of consumer through a variety of means. Because if your company is growing faster, that means employees in that company will be better off with better salary hikes and all that, which means more money in their pockets to counter inflation and then also to spend. If a company is not growing, there are no salary hikes. And if there are no salary hikes, there is no increased spending power. So I'm a firm believer that growth is the solution to inflation. Growth is not at the opposite side of the seesaw, saying that if you have growth, you will have inflation. I don't believe that let's say the commonly held macroeconomic logic that that price stability should be the fundamental focus for policymakers. I don't think growth economies or young economies or relatively less developed economies like India should be focusing on. I mean, I'm not saying go for hyperinflation or have hyperinflationary policies, but there is a tolerance range which we are very comfortably within. I don't think we need to focus too much on inflation. Government should really go out for growth. One worrisome thing, by the way, in the actual data has been that the capital expenditure figures that the government budgeted for very little has been spent. I was looking at some data and only 50% has been spent till now. And there's hardly a couple of months left for the financial year to end. That is not correct. So when you have budgeted for it, please spend that evenly through the year so that the growth is then also evenly spread out through the year rather than bunch up all the allocations for the last quarter so that all data becomes sort of concentrated in 3 months. And that also leads to wasteful expenditure because then departments, ministries all rush out trying to consume their budgets, which means really not enough thinking or planning, and really a lot of waste gets done when you have such kind of concentrated bursts of spending. So the capex figures, while were very good in the budget of last year, they have not been adequately spent. I would really request the government to focus on the spending, not just budgeting. So the spending has to be evenly spread out through the year. For me, that is a really important thing for the government to actually focus on, not just making the policy, but following through on the policy.
Fair point. Walk the talk. That's what Shankar Sharma is saying. Be prudent about the expenditure and give more money in the hands of consumers so they spend more and the economy cycle keeps on moving. But Shankar, Nilesh, both of you, thank you so much for joining in today to tell us about what the markets want from the budget.